The Hedgeless Horseman here again. It's December the 29th, 2022. This video will be a refresher course, let's say, on value trading or value investing, and using the margin of safety and risk reward, and always be mindful of that. Let's say, and it's in my opinion one of the best ways to beat the market, and also it doesn't require too much maintenance. You don't have to trade per se, you don't need to watch stock charts all the time, etc., because we're talking about you should have some margin for error, let's say. And as always, because I still get asked, like, how do you sell, how do you come up with a sell decision or whatever. And typically selling and buying is quite organic, because if you're fully invested, you have to sell something to buy something else. And if you keep comparing the opportunities you have in front of you, because you can buy any stock, so the opportunity set in front of you at all times is any stock on the stock exchange, on any stock exchange, well, that you actually can access, of course. And then it simply becomes a matter of what cases are the best at any given time, given the prices we're seeing on any given day. So let's just look at I-80 as an example, which is, I talked about I-80 a bunch of times. I actually started, I think I bought my first shares around here or something, or maybe it was around here. I don't remember actually, but down here, I mentioned I-80 a bunch of times on K Report, and I think on these podcasts as well. So it's like, when you think about what happened in I-80 Gold, okay, we see a stock chart here. Sure, okay, you have your ups and you have your downs and then your ups, okay. To someone this might be, kind of chaotic. It's like, okay, we're back to the recent highs, whatever. It's like nothing has happened if you bought here, whatever. But think about how the opportunity changed with fundamentals of the story coupled with price, because it's obviously price versus value, what you actually get. So after it topped here, and I don't think this was actually expensive for this company, but what happened then? Okay, it started a decline, and I think, if I remember correctly, there was some fund who needed to sell down here for whatever reason. Obviously, it's like, just fast forward a few months and that looks incredibly stupid. But hey, I mean, if you're a fund, maybe your hands are tied, or you're getting out for some bureaucracy reasons or whatever, or you get redemptions if you're actually, have investors that pull money. Who knows? But what we do know, that when they started hitting some obscene intercepts, value did not decrease. And these intercepts were as real as they were here when they happened, as they were down here when price was very low. And then they made, this discovery here later on, 60 grams per ton gold, 900. I mean, just a bonanza return, and they've hit a bunch of other stuff. And they have, like, again, I think down here it was valued at 500 million, which is absolutely brain dead. If let's say over 10 million ounces of gold and I don't know, over 100 million ounces of silver in Nevada, obviously one of the most prime jurisdictions in the world, if that's valued at 500 when they have resources that would take 10 years to drill up or whatever, cost hundreds of millions of dollars. They have infrastructure. They have like 2 mills, I think, one refractory, that can process refractory, or one of the 3, I think, in the whole state of Nevada, for example. I mean, it's just obscene, obviously, how that could ever be valued at 500 million. So it's like, think about it. Let's say you buy the top here because you think, hey, I mean, this might not be too cheap, too expensive, but it's around fair value, let's say. Maybe it was above fair value, who knows? I don't think so, but let's pretend. Okay, you bought for $5,000. Okay, you see share price go down, you see all these really nice hits. Then you see the CEO buying for like $500,000, then he's buying $250,000 more, and he already owns a bunch of stock, obviously. So like alarm bells should be ringing like, Jesus Christ, this is cheap, and the CEO would know, and he's already, smack full with shares. And this is not just signal value. I mean, you add, he has so many shares that he probably needs a very good reason to add for $500,000 more and then $250,000 additionally. So it's like, I bet around here, well, maybe he, I don't know, tried to help the share price bottom perhaps, or he thought like, yeah, okay, this is so dirt cheap now, it has no business going down anymore. So why on earth wouldn't I buy? Because you know that you're gonna make money on these buys. And that's what I also talk about. You don't know the future. You just know that if there's a big price to value gap, that's a good buy, regardless if price goes down. But most people just look at what happened and say, well, it was a bad buy. Here people will say this was a bad buy. All of a sudden, just a few months later, a superb buy. And this obviously too. It's like you buy here and then it goes down, and people say, oh, I mean, this guy's been catching this falling knife. What an idiot. And then you're up under, I don't know, 70% or whatever. So obviously, time becomes a factor, because when he bought here, I thought I'm pretty sure he's pretty clear that he has no idea of knowing if this is the price bottom in the short term. But when he compares what he's buying, he's like, yeah, I'm gonna make money on this one day. And I remember when I talked about I-80, I don't remember if it was a month or two ago, and I said, hey, I think all my buys in I-80, even the ones up here, are gonna be in a profit one day. So right now it might look stupid, but this was already cheap, and then it was stupid cheap, and all of a sudden you're in profit on every single buy. So is that like some kind of magic or whatever? No, it's just that you know that this is one of the most de-risked, high-quality juniors around. And they just kept on adding value, and still, as value went up, price went like down and sideways. So there's, the pressure is building for this price to value gap to close. And even again, okay, let's play this out. This is why I'm suggesting again that volatility is your friend if you know how to use it and you have a longer time perspective than the market, and not only try to guess where is price gonna be tomorrow. Let's say you started off with 5,000 here. You didn't check your portfolio, or this case, let's say, okay, but you might have seen news like, oh Jesus, okay, this store is getting better and better, CEO is buying great. Now we're down here, and you look like a complete idiot because you're down 50%. Yeah, okay. Most people would take that as, this stock is never gonna go up, or I must have made a mistake, because everybody says you can't be down 50% if you have not made a mistake. So like, first of all, if this, what is this, like, yeah, March of this year, if this stock is up just, I don't know, here or whatever, in 1 year, that's like, okay, not superb results, but it's like, yeah, it beats the average market, what the market averages per year, which is like 8 to 9%. Okay, anyway, we go down here, and you're like, okay, I'm down 50%. So you have 2,500% left, and you're like, oh Jesus, oh, curse the stock market, curse the juniors, whatever. What you should be thinking, like, okay, this was maybe a buy here, a good buy here. Now it's an absurd buy. Maybe 400% better buy than up here. So I just use this example that you invest only 10,000 more, and at face value that suggests you only think that it's 100% better risk reward and better buy, better margin of safety, better investing case just by 100% than up here, because you only added 10,000, let's say. Well, at the same time, one could say, well, you have 12,500 in place, so maybe it's 125% better case, sure. But in reality, I would bet, or I would guess, because nobody knows for sure, I would say that the opportunity here was, yeah, probably at least 300% better than up here. So what looks like a curse, let's say, might have been, I mean, I think I said that at a time in a video, I wouldn't be too against having, like, especially if you don't have too much in your portfolio, big of a portfolio, to have like 30% in I-80 at this price. Because this is one of the most de-risked, highest margin of safety plays there is, with a ton of exploration upside, and it even has the potential to become a producer, meaning forcing revaluation, monetizing, and forcing Mr. Market to look at something else than just price and be a trading sardine. Because if you have a project, and that's why have often used Bear Creek Mining, if you just have a project that requires $1.5 billion in capex, you have no way of funding that yourself, really. I mean, by definition, even if it's a relatively good store or whatever, if you can't produce a lot more value and you can't force it into production and force out the value, that could be a trading sardine forever. But they actually have mills, plants, etc., good access to capital, I would say, certainly one of the highest quality resource bases around, and in a tier 1 jurisdiction. So there's not a single red flag at this valuation for I-80. So let's say if you just were aware of what was happening, price went down, value did not go down, value went up, quite a bit, especially in relation to market cap of 500, because obviously if you have some drilling success and you have a market cap of 1 billion, maybe that adds 10% in risk adjusted value. 100% or same drill success, if the market cap is 500, that's 20% from 100 million in added risk adjusted value. So the actual impact on the case at a 50% lower market cap goes up 100%. So any good news down here should get you to buy more than any good news up here, obviously. So let's fast forward. Okay, this stock didn't stay brain dead forever, because let's say the fund actually sold out, whatever, and then it revalued. I remember, I think I talked about this, just go to show how stupid it is to, in my opinion, be trading these no-brainers for technical reasons. I think it was around here. I was gonna add more in I-80 in some portfolio. And at that exact time, I think this candle here was below whatever trend line you could draw here. And I held off buying. Obviously, that would be like one of the absolute best buys that went to do. If I would have bought that, what its surface looked like a breakdown, you would be up 78% right now. Okay, so that was the technical analysis in me, who's like, yeah, it can get cheaper. And I got punished for it, deservedly so. I tried to be cute. It's like I've said before, okay, if you have, let's say, who knows, maybe the risk-adjusted fair value is, you expect to at least have a 122% return sometime in the future, and you're betting that it will get even better. I mean, that's just greed. That is just greed. That is greedy greed. And consider these things. Okay, you have the same price here as here. Should you have the same size? Should the position have the same size here as here? I would say it warrants a bigger position here than here. Why? Because a lot of value has been added. It's a much more de-risked and better case. With they recently announced some really good zinc intercepts and showed that, hey, this, polymetallic silver-rich or zinc-rich system, CRD system, appears to have big legs because there's like hundreds of meters from one of the other good intercepts. Who knows how much that could be worth? And this is obviously, you see here, this is technical stuff. I mean, okay, as soon as it hit kind of the same top here, that it hit around here, it retraced. That's traders. That is traders. They're not thinking about price versus long-term value, whatever, and it retraced. You see a big red candle here. I mean, this was such a, in my opinion, for again a value investor, it's like, okay, it goes down for technical reasons, and traders typically don't make much money, I would say. I mean, traders weren't buying down here. Maybe they'll buy here, and then they have this kind of, they play, let's say it gaps up, or maybe, who knows when they actually get in. It's like, yeah, okay, it broke up. Maybe they get in here. So it's like luck. Yeah, 34%, sure. And they have, a typical trading position for their size. Who knows what that is? A value investor who's like, yeah, this is one of the best risk reward cases in the entire space right now, could probably have, depending on portfolio size, could easily have, in my opinion, without being actually too much of a risk fiend, at least in your junior mining portfolio, 30%. So that's like 83% on 30%. How much do you think a trader will enter with? If he's just a trader, doesn't know much else. Yeah, sure, he might enter with, 1% position and get a 34% bump or a 2%. It's like, okay, great, you can go buy some milk and cookies with that. Obviously, I'm, exaggerating a bit, but I hope you get my point. It's like, and I've said this before, it's like, if you have a long-term case, you know what the long-term value is. You know that this is, especially when, sentiment comes back, this is a high-quality stock. It has no business being down here. So you have huge margin of safety that the revaluation higher is, there's a 85% chance, let's say, you reckon, that a violent revaluation higher is a matter of when and not if. Obviously, you should be able to take a much larger position than a 1% position in one of the best risk-reward cases around. So even though this isn't a, I don't know, it's obviously not a 10-bagger, maybe it's 70%. But if you have a fat position, it's like easy peasy, high probability returns, and you have a 10-15% position in such a such a great risk reward case, I mean, that's going to pay for a bunch of these small trading positions that they put on. And again, okay, it hits the same level. What's so magical about $4? Nothing, obviously, except it's a trading, pivot point. Okay, do you think it's going to go higher? I mean, this kind of looks like it's making a cup and handle, obviously. So again, a trader would sell here, and who knows when he would buy. Maybe he would buy when it breaks higher again. But if you know that, hey, this company is still stupid cheap, even if gold goes down, it's stupid cheap. And yes, it can go down, and we have no idea when the short-term bottom is, but we know that, hey, if I hold this over a 1-2 year period, I'm pretty sure I'm going to make at least 100%, let's say. That's a very good return. So you would obviously be front-running this breakout that you see coming someday and just add more. Whereas again, a trader would probably sell here and not enter with his typical, 1-2% position or even that when it has broken out. Whereas a long-term investor, a value trader, he's like, yeah, okay, the more this goes down, the better the buy it becomes because price is diverging even more from value. So you'll increase your position the lower it goes. So when it actually breaks out here, when it breaks out, and let's say they have more success, so you have value all the way up here, then you're like, yeah, okay, Evan, let's say you're up to a 5% position again or 10%. Yeah, that's an easy 33% or whatever. And down here, you might have jacked it up to a 10% position. But as price, if nothing else happens, goes up, you might take some money off the table. Because again, price, if value stays the same and price go down, the risk reward increases, the price to value gap increases. But I like this idea. It's like front running breakouts that traders are waiting for. If you know the story well enough and like, yep, there's very, very high probability that this is super cheap and it's gonna keep getting cheaper if price stays like down here, and as they increase value because they have exploration success and they have discoveries, etc., etc. So there's a very high likelihood that value is going to keep increasing, and the longer I wait, there's going to be even more pressure to the upside. So it becomes a when not if thing. And on that note, it's like Magna Mining. Okay, let's pretend here again on the topic of like price is what you pay, value is what you get. Okay, let's say when I published the article on Magna Mining, which assumed like I thought they might have a 3 to 5 million ton high grade underground resource, which would put them on par with Talon Metals, which had a 400 million market cap at the time. Maybe the risk adjusted value was that I had theorized was around 414%. That's why it was such a big position. It's like I'm pretty sure it's gonna, given what Mitsui suggested, the Shakespeare deposit alone would be worth. That's why I put it as, hey, this is one of the biggest no-brainers I've seen. I think I had it a top 3 position at the time. Then we got the actual closing of the deal, which we weren't sure was going to happen. I mean, something can always come up. So one could say one should risk adjust this by whatever certainty. Let's say 70% certainty it was going to close. So maybe the actual risk adjusted fair value was something along these lines. So like, yeah, it's a 237% risk adjusted free money on the table by Mr. Market. Okay, that's super nice. Then it actually closed, which would jack that up here because now certainty was 100% that they indeed have Green Hill. But it wasn't just the acquisition. They released the maiden resource, which blew my expectations away big time. So if you thought initially that this is this is what the valuation for Shakespeare and Green Hill would have if my assumptions of the maiden resource would be correct. Obviously, that got blown away big time. So maybe you jack that up to like $3.5. Who knows? Obviously, a lot more than whatever target price I had if I assumed it was going to be a 3 to 5 million ton resource, not 31.5 million ton resource. So obviously, you jack up the fair value by quite a bit. And all of a sudden, yes, okay, you see it opening up, 40% higher, and people will see that as, okay, it had this big, tail candle here, for example, and you're all of a sudden, if you bought here or here, whatever, it's like you're up 40%. It's like, okay, great, 40%. None of the other stocks I own are up 40%. I better take my profits and run. But then you're completely missing the fact that this fair value, got increased by orders of magnitude. So the risk-adjusted, you would sell here even though it's like the case got even better from lower levels. So even though it's up 40-50%, it has more risk-adjusted upside after it has gone up 40-50% because of the news than it had at a lower valuation without the news. So it just became a better buy. But of course, there's some dudes that were selling here, obviously, and some dudes that were selling this and whatever. It's like I immediately said, okay, the case increased by orders of magnitude. The risk reward increased by orders of magnitude. And so far, I've pretty much, even though I already have a very big position, I've been net adding pretty much every dip on the way up, because to me it's like the market is absolutely crazy. And now today, for example, this looks like in the same case as I-80. It's like, yeah, you reach some technical level here, and then traders come out, and the ones who, maybe bought here or bought here, whatever, they're like, oh, I think we're in for a short-term top here, so I'm gonna take my money and run because we might have this. It's like, yeah, sure, whatever, do that and play for, in my opinion, pennies. It's like somebody, I think it was a few months ago, like, I'm gonna intraday flip Magna. It's like, yeah, do that. It's like, just from hodling and increasingly buying as the case got much better, this ramp here was a matter of when, not if, in my book, because it's been so insanely cheap. It's like, from what I've seen, no nickel junior even comes close to Magna. And right now, again, it's like, what's the fair value of Magna right now? I would say it's around 300 million at least. That's not accounting for any real, upside surprises in terms of grants or exploration success. And I think 300 million is really lowballing it at these nickel prices. Right now, I think 300 million is low. Okay, are we at 300 million? We're at maybe 125. So to me, even with this hike here, I think, okay, let's lower this. But still, it's like, depending on obviously where you want to set like fair value. But it's like, yeah, this is still after this ramp. This has one of the highest price to value gaps around. And contrary to, there's not a shortage of juniors out there that have some PA that suggests that $1,800 gold were worth 500 million, and they're trading at like 50 million or whatever. But they might not be even close to having being able to monetize that, put that in production. Maybe they can't finance it themselves. So there's no real way to make the market fair, to punish the undervaluation, because they cannot monetize it. That is not the case for Magna. They have extremely advanced projects, pretty much all major permits in place. They have a toll milling option, which they're going to look at within the next 12 months. They are in one of the hottest commodities around, where you have government scrambling to secure supply and make sure that they will be the EV battery hub. There's a battle between Canada and the US. Magna is one of only 2 juniors with a feasibility stage nickel project in the whole of North America. And they, again, could potentially be toll milling within 12 months. And at these nickel prices, that could print a lot of cash flow. I hope you saw Doc Jones. I just used, I think, 1,000 to 2,000 tons per day throughput in a toll milling exercise. But they could potentially like free cash flow half the market cap or something. Even if that's close, even if it's 25% of their market cap, obviously that's like a friggin' big deal. So Magna is one of few juniors that actually has a way to. What is the market going to do? Let's say you fast forward 12 months, we're into production, and they're, next quarter, they're, Q1 of 2024, they're, producing or throwing off like $34 million in free cash flow. You think it's going to stay at 120 or let's say 150 million market cap? No, I don't think so. Not with 50 million tons behind them. And who knows, maybe we get an actual grant and they can fund the whole hub and spoke model, or they might fund it with grants and cash flow from their toll milling enterprise. So it's like, who knows? Let's say they get thrown 100 million their way from some government grant, and I'm not saying it's going to be 100 million, but at this market cap, 25 would be a big deal anyway. And yeah, it's just, in my opinion, still ridiculous. And still you have, same with I-80. I actually think this is almost more extreme actually. But it's like, yeah, you have some token resistance level here. And you have traders like, yeah, I'm gonna sell, I've taken my profits. Like almost nobody makes any money in this sector. And trading is a lot harder, in my opinion, than long-term value investing. So it's like, yeah, why don't you play that? Why don't you go and play for these pennies? Like maybe you're hoping, fingers crossed here, that the market is so stupid. I mean, literally, this should already be up. I think it should be up here already. I mean, today basically up here. But you're like, yeah, I'm gonna trade this. Maybe we'll get a retracement like this, and I can take my 2% position sold out, and then I'm gonna wait for it to break higher. It's like, yeah, okay, but I'm pretty sure we're gonna go way higher, especially if nickel doesn't craters. So I'm gonna stick with for the time being, with my nosebleed position. Maybe I'll even add if it goes down. So while these traders, let's say, they get out here and then they might buy back, and they might be along for a, who knows, 30% rise before they chicken out or whatever, or conclude that, hey, I think the top is in. So you get like 30% on your 1-2% position, and you're like, yeah, I'm the man. Whereas at the same time, maybe I have, a 30% position and get another 30 on that. It's like, yeah, okay. Who's gonna make the most money? I think, again, a value investor who understands risk reward and understands when it's like, Jesus, the odds I'm getting on this bet is like obscenely good. They can take a much larger position. So a 30% rise for them is worth much more than a 30% position for some trader who's like puts a toe in the water and snaps up 1% of the portfolio or whatever in one stock that they're trading. And I bet you there's been a bunch of people that has traded themselves out of this stock. It's like, look at this candle here. It's like, oh, it's probably a top. It's like, oh, it's not a top. Probably a top. Yeah, short-term top. Top, whatever. It's like, yeah, I still make more than you because I bought every dip and have kept the full position all the way up. But again, it's like almost nobody makes money in this space. And if it's a no-brainer, I mean, that's what I love with cases like this. I mean, you don't get cases like I-80 at $2 often. You need an extreme bear market, an extremely stupid market, even to get risk reward like that. It's like, the layup of all layups. I don't think it's even expensive now, for example. And again, this is like a technical level. Do I think it's going to break higher than this? Yeah, I think so. Whereas again, traders will, maybe go out here and then they'll maybe enter with some whatever. And it's like, we're going to blow the returns away anyway if we can take fat positions when the risk reward is absurdly good. It's like, again, at 125 million or whatever Magna is at, okay, what's the downside here? Long term. Okay, it's worth a lot more than that right now, so what will need to happen for this not to be cheap? Well, nickel is probably gonna need to crash like 30% or more, maybe 40. Other than that, I have no idea. Everybody's scrambling to get nickel supply going. So it's like governments want to make sure that nickel mines get going. So it's like, talk about risks to the upside. And you're already, again, it's like the risk to the upside is here right now because of the price to value gap. And if they get some grants or go to the toll milling route, which they've done before, the FNX team, they built over $1 billion company simply from toll milling. So it's not like they don't know how this works. They know very well how toll milling works. And if they have some football bonanza discoveries, I mean, what's that worth to a market cap company, a company with a market cap of 125 million or whatever, and then you have, on a permitted project, and you hit bonanza stuff that's like any miner would kill for. No, it's just ridiculous. It's like, yeah, and you see it already in the CEO. It's like people are already trying to, again, like they always do, predict the top. So I'm gonna wait for it to go down. So it's like, okay, in that case, I guess you're totally out of the stock and you hope to get in better. It's like you missed, the big money's in the long-term runs and having a fat position as long as the margin of safety is there. If Magna was up here right now, I wouldn't really be calling it, I don't know, one of the best risk rewards around, because that at that point might be closer to like fair value. But obviously, if Jason's vision comes to fruition, he says he's not going to sell a share until they're at 1 billion, and this does not have Magna at 1 billion. I don't know what kind of market. I haven't done the calculation. I don't know the what dilution, but let's say, what the hell, let's say $6 is like, this is when Jason, the CEO and one of the largest shareholders, say he will allow himself to take some profits off the table. Let's just pretend it's $6, and he's a very competent manager. So it's like, yeah, there's some upside left, and if this would take 5 years, that would crush the market anyway. So yeah, I mean, it's not usual. It's not often I can say like, yeah, it's already run 100-200%, and you're sitting there, yeah, it's it's pretty much a no-brainer still. That doesn't happen often. This is why Magna is such, in my opinion, one of the most unique cases. And like I said before, it's like, probably the best risk reward I've seen in 7 years. And although it was even better risk reward here, I don't think it has gone down enough that it's not still the number one place. Simple as that. And obviously, it's like, if you let's say had total clarity. Now I have a very big position in Magna. Obviously, unless something happens, one should have the highest position here when everything changed. Let's say you have, okay, now I'm going to talk, if you have a small portfolio, you're comfortable with risk, yada yada. Let's say you have 30% position right now, right here. Because price is here, it's like, yeah, fair value is up here. It's like obscene. It's like, yeah, it's a price to fair value gap of 491%. I don't know many juniors that have that. I don't remember if I've seen anyone that I would say have that on a risk adjusted basis, hence this being such a good case, especially here. But I've been buying all the way up. Not that I, increased it by a mile, because I already had a fat position here. I already had a big position here. So the position increased. I mean, if you're a true value trader, let's say, it should really go the opposite way, unless value jumps even more. So let's say you would have 30% here, but 20% here, whatever. Because again, price has gone up. Value hasn't increased that much more. But in this case, first of all, I didn't have the dry powder really, but I'm still comfortable having a bigger position here than here. But typically, yes, that is not the best way to go about it. Obviously, it's like IAU. You should without anything happening, at least, you should be willing to have a much bigger position here than here. A much bigger position here than here, although value went up. But it's why? Because it's like, even though value is going up, the price to fair value still decreases. So when it's the highest, that's when you obviously, the opportunity is best, you would have most amount of money. But again, we can't play for perfection. But in this case, I think, again, personally, I think that there's such a long way to fair value. Let's just pretend it's 193% to fair value still, without any additional success, really. I mean, they will have to show that, the case is intact, but I have no reason to doubt that it is intact. And we know that, Jason has a much higher target price for when he will take his first profits. I don't know if I'm as ballsy as Jason, but if you would take the Jason pledge with my kind of position, I would be able to retire when Jason allows himself to sell his first stock. I can't say I will do the same, because it's already such a big position. But I can't ignore the fact that I think there's significant risk-adjusted money on the table at this level here. And I can't say that for many stocks that they have the same risk profile. They are that de-risked, that close to monetization. They have possible free money coming their way. Now I know some gold stores that are really cheap, but typically I would say they're like maybe 100% away from fair value. Not almost 200%. And they're not in Sudbury, Canada, with this kind of management team typically, and with possible government grants, and again this close to production, and with the option of actually having organic growth through toll milling cash flow, which could happen in like 12 months. There's simply no other junior around that I know that has that. Yes, there are some people who throw around some nickel juniors, but most of them are like very large, low grade, requires like 1.3 billion in capex. I mean, that's more of a beta bet. If nickel doesn't go anywhere for quite some time, I doubt anything will really happen. How do you increase the value of such a deposit? You can't fund it yourselves. But does that mean that those juniors are not cheap? No, it doesn't mean that. It's just that I like the fact that Magna has the competence, backing, and such advanced stage projects with the toll milling option that they can actually force the issue. Again, it's not 12 months from now is not a long ways off. And there's a bunch of stuff that can happen in the meantime. And in my opinion, I know what my long-term results are. I don't think it's a good idea to be short-term trading stories like this. Or like I tried to do in IAU when I held off buying even more because I thought it was going to go down. That was just stupid. But I make mistakes all the time. And we don't know what the future is going to hold. But based on everything I know about Magna right now, I think it's simply still stupid cheap. And I leave the flipping for pennies and trading these tops. I mean, again, it's like, I almost went insane seeing, share price move down for a week or a few days, because it's like, it should already be up here somewhere. It's like, who in the world is selling? And how on earth cannot there be enough awareness of Magna that somebody allows this selling? Of course, if you're accumulating, like today, for example, we're plowing through huge volume. So it's like maybe people shorting, locking in their gains from the private placement. Plus you have traders, and there's, perhaps people like me who's like, yeah, this is still dirt cheap. So hopefully we're churning a lot of volume because we hit some technical pivot zone, but I dare say that the people buying here are probably gonna be people making more money than the ones that are trying to trade this. Because in my opinion, we don't even need a catalyst for a fund to go in and just, hey, I'm gonna, this is stupid cheap, cheapest nickel junior out there, bam, we run closer to fair value. I wouldn't bet against that, because again, it's like we don't, in my opinion, don't even need a catalyst. We just need someone with money and brain to figure out, Jesus, this is cheap. Kind of a big rant. Of course, I'm super biased. I have a big position, very big position, and they are a sponsor as well. So if this doesn't make, do your own due diligence. If this doesn't make sense, you should do what you do, obviously, because I can't be holding people's hands all the time. And I have no idea what's going to happen in the future. Maybe in 12 months, maybe it will have 4 bag from here, or maybe it will be down for some unknown reason. I just think the odds are to the upside over the next 12 months for sure. Snowline, I've talked about this before. Again, it's like here you have the latest news release before the actual new drill results, which came in on, I think, December the 22nd. Okay, so nothing really changes. They acquired the golden Olay claims. Obviously, added some because it was a cheap deal, and pretty good targets, I think. So obviously, value increased, but, market didn't care, sure. For a time, it went down 12% again in price. Nothing had changed in value. And at the same time, just, let's say, December, a month later, it was up 43%. On again, no news. So you have a span of 50%, which affects risk reward because price changes while fundamentals don't really change. Yes, gold might have gone up or down or a bit or whatever, but it's like, yeah, this is not going to be a mine in quite some time anyway, if it becomes a mine. But this is what I'm talking about. It's like, yeah, of course you can use this volatility. You just don't need to be the typical person who sells every downtrend and buys every uptrend. Risk reward all the time. Okay, if value was here back here, value is still here if no news is out when it gets to here. But you can see how the risk reward changes. Maybe there was a 29% opportunity here to risk adjusted fair value based on what we knew at the time, which is still positive, but down here might be 108%. So it's like, just keep in mind, it's like if price changes and fundamentals do not, it still affects it. The risk reward gets better when it goes down, gets worse when it goes higher. And now, who knows, let's say risk adjusted fair value has gone down a bit with, the blue sky potential getting a bit of a hit. So maybe risk adjusted fair value is still $4.87, and there's like a 71% risk adjusted free money on the table presented by Mr. Market. And maybe when it was down here a day ago, maybe it was 80%. So still, 10%. That's nothing to sneeze at, actually. Although it's like, yeah, I wouldn't. I mean, if the margin to fair value, because we don't really know what fair value is exactly, you don't want to have just 5%, obviously. It's like, let's say, blue sky decreased and price jumped anyway up here. So it went from like, let's say this before the news, 53, still pretty good. And we don't know the results. We can only do so much. We can only act on, when the case actually changes, when you have new information. But let's say after the news release, if price would have gone up for whatever reason, it's like, but blue sky went down, maybe there's only a 20%. I mean, that wouldn't make it a slam dunk buy, for example. But right now, it's like, okay, Quinton thinks it's going to be 10 million ounces. What is that worth? And we have to factor in the possibility of them finding even more, etc., etc. What is the actual fair value for Snowline? I'm not 100% sure, but we know that price went down, and that we at least know. So even if I mean, all we really want to see is that fair value is not below the current price. That would be a sell, obviously. But I don't think so. I don't think it went down that much. I do think 10 million ounces looks doable, and I know they have a lot of other potential. If Gracie hits, I mean, everything will change again. And who knows? I mean, maybe they hit some smoke at Gracie, I don't know, or maybe they hit something substantial next year. But let's say they hit a discovery hole at Gracie. So maybe, let's say blue sky for both Valley and Snowline, etc., jumps up to here, for example. And then we have a reaction in price and it goes up here. That would still like be, okay, there's still 110% of, probable upside left, okay? Versus it was, when it was lower and price was lower, it was less than 110. So again, it's like, I don't mindlessly look at price, like, I can buy something that's gone up. It's like, why? Why can't you buy something that has gone up? I mean, I remember this period quite well. Everybody was screaming tops all the way up. Yes, finally a top came, and yes, I suffered a big correction. But I could afford it much easily because I hadn't sold any, I don't think I sold any, on the way up. That's the thing. It's like people just, cry themselves to sleep because everybody buys high. I mean, they don't buy here or take profits. Then finally, they get the courage to buy just in time for the actual short-term top. So that's kind of how I guess I see Magna Mining. Same here. I mean, you can kind of see the same pattern. It's like, yeah, I thought it was a no brainer at 2. It went to like 4. But you have to, and again, then the case change. Sure, Blue Sky has decreased from the theoretical, like this could be 40 million. Now we know that. We didn't know that before. We needed to get those assays. But still, I mean, you would be up for. I mean, this would still have kicked the ass of most juniors around. But everybody again always wants to. It's like, yeah, how much was a crying real? It's like let's say you realize this for what it is. It's like, yeah, okay, you buy here and just sit on it. Let's say you're with the ups and downs, and then all of a sudden you're up 200%. Yes, then it has a fat correction, and you're quote only up 70%. This is still handily beating the market. This was a two-month time frame. If you're up 70% on a 2-month time frame, that's great. Even if you did nothing but sit along, and maybe it is kind of cheap now, you're still up 100%. Like, what's that, like so like 6 months, 100% every 6 months. My goal is 50% per year. It's like, yeah, I think Magna could do 50% per year. I think my bet is that Magna will do way more than 50% per year over the next 3 years. That's why I like it so much. Is there a guarantee? No, but I think it could do 200% or 300% next year as well, which would pay for years worth of returns. And down here, it's like, yeah, I8, it's like 100% would be in the bag pretty much, and it ended up being in the bag. From here, I'm not as sure that 100% higher will be like, easy as that. But I see this as a bunch of traders just, sitting on price or whatever. It's like there's a bunch of trading. You can take full advantage of traders. Like, okay, take this, kind of range here. It's like, okay, it bounces up and down, bounces up and down. It's like, as long as you're a value investor, you're like, okay, let's say you buy more here as it goes down, it goes up. Maybe you take some profits because risk reward is decreasing with price. Maybe you don't. Who cares? It goes down again. Maybe they've added enough value over this time period that, okay, it's at a higher price than here, but value is actually increased even more. So you actually add here. And then the same thing happens. Maybe you take some profits or not. And down here, they've added even more value. So now you're up to, who knows, maybe you started off with a 5,000 position here, jacked it up to 15 here, 17.5 here, and then you have 25 or whatever, and then boom, finally, the market becomes a bit more sane again, and every previous decline is forgiven because you acted on it. When you get short-term pain, you realize that, hey, that's just one part of the story. At this point, yes, we have this as past, but who cares about the past? It's about the future. And you have this gap from here to here sometime in the future. So it's like, again, everybody sells out here because they look at this. It's like they don't buy because they don't look at, investing is not about the past. The worse the past, the better the future, especially if nothing real has changed for the case, especially if it's gotten better. You have all these hits and still the price went down, like Jesus. And people say that the market is always right. If you have that mentality, I think you're gonna lose money. The only time that is correct, I would say, is if you're a trader. Because you don't care about anything. You don't think the risk reward is better here than here because to you it's just, a trading pattern. Oh, and here I'll buy this breakout and have my 34% or whatever on my standard trading position. Whereas somebody who's like, yeah, Jesus Christ, this is just a matter of when, not if, this is going to revalue 100%. And you'll take, a 20% position. So you're going to crush the trader in the stock, even if it's right. Even if he's like, oh, I'm selling this breakout here. Yeah, let's say that happens. He sells this breakdown here. I'm out of the stock. And it's like, okay, I don't dare to enter here because I don't catch falling knives. Okay, a top here. And then we have a trading pattern, yada yada. I'm waiting for this to break out or whatever. It's like, yeah, okay, you get back here. Let's say they actually traded this perfectly. It's like, I'm getting out with my 2% position here, entering 2% position there. Who cares? It's like a value hound would be like all over this buy zone here and like chomping at the bit of buying this low. And he would maybe, this position alone might pay for who knows how many other stocks. I'm sure I would bet that the value investors in this stock are making more money than the traders, even if you're a kind of perfect trader. But still, you have your typical trading position. If somebody, a big fat value investor, like saw this for what it is, yeah, he might have made less in terms of percentage gains, but he'll have a much fatter position down here before the run up. So maybe he again has like 50% on 10% position, whereas this guy gets like, yeah, he didn't have to sit through this, but he has like 35% return on a 1% position. A big rants, but I hope again you get the point, and that's why I love stuff like, especially like when these, and I especially like the more de-risked plays right now, because I still think the risk success is too undervalued. It costs typically more to actually, it would cost tens of millions to do what Magna has done. No guarantee of success, and then you'll have 10 years of permitting or whatever to reach the stage they are at. So it's like, it's absolutely no-brainer from a sunk cost perspective, and from that perspective, I think IAU Gold is actually a no-brainer as well. So again, if a trader wants to wait for this to break out, it's like, yeah, I'm not buying as it gets cheaper and farther away from value. Sure, I think I'm going to beat them in returns over the long term anyway. Because I'm just gonna press the bets when it's increasingly in my favor, and then I don't even need too big of a run to have, again, 50% on a 10% position is worth 500% on a 1% position. It's much more likely, in my opinion, to find something that's probably going to go up at least 50% and something that's likely going to go up 500%. That almost never happens. Consider me biased, assume I own shares of all companies mentioned. Magna Mining is a banner sponsor. Thanks for listening. Bye.